Hi, we're about 2.5 hours into the trading day on Friday 9th of February. This is the chart profit video. Let's start off with a look at the pre-open today. We're looking at the E-mini S&P. In the last 5 days we've had 3 instances of aggressive selling. That's the red at the bottom marking here on the profile. So far at least we've seen pretty good support here at 25.81, which is our 5-month controlling price. You can see here on the live 30-minute bar overnight here on Monday there was a dip below that level, but subsequent to that there's been support. So just ignoring this initial kind of momentum test below it, if we see price printing time beneath this level it would suggest lower, and we're printing very close to that controlling price right now. Most obvious resistance level to me is up here at 26.88, which is the 3-month controlling price. Real positive right now would be significant buying marked above that level. If we take these aggressive selling markings here, the red at the bottom, and I translate them over to the spider chart, so from the E-mini I translate the buying and selling to the spider, and we can see it here. We had a very elevated price oscillator here, much higher than it usually reaches, and we saw the price oscillator turn down. We mentioned that's just a dip in momentum at that point. Of course, since then we've gone negative, and our breadth indicator in the middle here is red as well, and we are marking red on the profile. So this is kind of bearish looking pulse chart, no denying that at the moment. So just back to the profile, we look at this level here, 25.81, which is the 5-month support, and this just could be a stall from this point. So I'm looking at where the time spent. Time under here would be a bit of a negative, I think. Just a quick look back where this came from. We're looking at the sentiment indicators. This is my version of the Ridex assets ratio. Reached its all-time high up here above 27, unbelievably. Not surprisingly, it's fallen back from there, 18 something as of yesterday. Still pretty elevated. Okay, this is the public poll from AAII. Again, not surprisingly, the bulls percent was down this week, the bears percent was higher. I'll leave you to read the notes on this one in the ebook, which will be released on Sunday. More to the point, this one, the Investors Intelligence poll this week, I think more interesting. The bulls percent this week was lower at 54.4, down from the previous week's 66%. 3 weeks ago we know it reached a 30+ year high. Bears percentage higher this week at 15.5. The point here, this was up from 12.6 the previous week, and that's the lowest I have in the database, but I'm finding this a surprisingly muted response I've written here in the bears percentage, considering the sell-off we've had since Monday. And I've said here it may indicate that more fear will be needed in this indicator before a low is seen. Basically the market has sold off really hard, bears just up a little bit. That's a little bit worrying. But this is also interesting. This is the Lipper US fund flows data. They reported equity fund including ETF outflows this week of 23.9 billion. That was in the week to Wednesday the 7th. And as I've noted here, this is the largest single week net outflow that I've seen in the database. So only have just a few single week net outflows of $20 billion or greater, and you can see those on the chart. They're arrowed, and although they precede pretty strong rallies in the market, I'm thinking let's not get too excited, because as I've written here, note though that this follows an extraordinary 4-week flow number the previous week that reached 60.7 billion. So the 4 weeks prior to this week there was an inflow of 60.7 billion, which took the 4-week flow number to a level where I have no other numbers like that. My interpretation of that, I just said it looks like the weak holders of fear of missing out money, as I call it there, piled in those 4 weeks, and then a lot of those are jumping out again at the first sign of trouble. So weak holders, I think, weak money coming in, the fear of missing out, suddenly it goes wrong and they jump out again. And that's most likely unlike these prior 3 instances of a really single week's high outflow. So that may be a kind of caveat, and we shouldn't be reading too much into this, because if you see the 4-week flow number, it's still pretty elevated here. Okay, we've already seen the spider on the pulse chart. This is the live chart. Best reference level I have here is the 4-month here, 267 or just above. Currently printing below that level and towards the low of the week. Looking here at IWM, the Russell 2000 ETF, time spent in here migrated the 8-month to 149.63. You really want to see price printing time back above that level before we assume any strength in this chart right now. Have no reference levels down here anywhere. Look at 2 European charts. This is the German DAX. A dramatic reversal up here when it probed above the previous high. Bit of a trap there, and then we broke below the 18-month here, and quite dramatically lower right now, this German index, as is the FTSE 100, the UK FTSE 100, down here closed close to the low of the week. Okay, this is TLT, the T-bond ETF. Talked previously about the halfway point from this low back in March to this high, which is the dotted blue line here. We saw support here and here, and then 2 or 3 days below that level, and bonds have come lower. And the big level on this chart is 119, which is the major controlling price, and we've actually tested below that level and printing below that level right now, which is weak price location. I'm just interested to see if bonds can recover that level and give us some indication of strength above it. That would be really interesting, but right now a weak chart. We've seen a pretty universal sell-off in most assets this week, likely due to the catalyst being the expectation of higher interest rates. Even gold has taken a tumble this week. Strength would be indicated here in the minor time frame or short-term time frame if the chart can print some time back above the 2-month at 126.60. We know the major support now down here at 120.90. Oil also, we're looking here at the United States Oil Fund, USO. This chart as well has seen quite a setback this week. Still in a long-term strong price location above the major at 11.41, but off quite sharply this week. Okay, so we're looking at the dollar index, and that actually has rallied a little this week, but a strength in the dollar. I thought we'd see a test quite possibly of this half range off the 2008 low down at around 87. I don't see much chance of these controlling prices here migrating lower. It would take a lot of time. So unfortunately my first reference is quite a bit higher. Unless we see a test of this half range, I think the chart remains in a weak position here. And in the short term, that gives us the Euro FX chart probing, testing below its 2-month. Time below that level at 122.64 would put this in a weak position in the short term. If you bullish, you want to see a minor higher low above that level. The pound holding its trend line but stretched quite a way above it. We're on something like a 3-week low at the moment at the end of this week. Was there any clear level why the pound stopped at that point? Well, if we look back to the 2014 high to the low over here in 2016 post-Brexit, we recovered exactly half that range. That's what Gam would call natural chart resistance. And finish with the dollar yen chart. The 2-year controlling price provided support here, and we had resistance up here from the major, and I said that a breakout one way or the other below these 2 reference points would likely indicate the next directional move. We just had a little consolidation below that controlling price, and we've seen the chart lower from there, and we're looking to be on the low of the week right now. Okay, that concludes this video. Once again, I thank you for watching.